I know bonds are the most boring subject imaginable, but the bond market matters. Bond yields have been going up like mad ever since the Fed cut rates last month. The opposite of what you'd expect, and the velocity of the move is so fast that the stock market can't seem to find footing. Make no mistake, bonds are behind today's ugly action in the big caps. Dow losing 344 points, the S&P declining 0.18%, and the Nasdaq actually did advance 0.27%. I won't say bonds are the only thing that matters. Others do that. That's not true, though. And there are plenty of people who already give you that bogus argument. I hear them all day. So do you. It's absurd. The stock market has had a fabulous run, even as bond yields have crept up almost the entire time. They love to ignore that glaring fact, the bears. Every day is Groundhog Day for them. They see interest rates go up higher, so they panic themselves, and they are trying to panic us. But we will not be panicked. What are the bond bears really afraid of? Let's go down the list. First, the bond bears always like to use long-term interest rates, the ones set by the bond market, as a cudgel to hammer the Fed. To them, the Fed is the be-all and end-all because Fed watching, guess what? It requires no homework whatsoever. It's not like they're figuring out if Boeing has the requisite cash flow to be in on the underwriting or if ASML is really indicative of the state of the semiconductor business. If we were talking about the NFL, these are people who've never heard of the spread. They're only picking winners on the money line, not winners giving points. I think they're ridiculous in the lack of nuance. Rates higher, blame the Fed. Rates lower, take credit yourself. But here's the simple truth. Did the Fed need to do a double rate cut, moving 50 basis points and not 25? Yes. Yes, they had to do it. If they wanted to be sure that the proverbial plane didn't crash, it was the best way to keep alive the promise of a soft landing, no landing, or a quick touchdown and fill out. So no, Jay Powell's not a dunce or a softy. He's just doing his job responsibly. And these constant naysayers will be wrong once again. They really bother me. But because bears in the peanut gallery are never held accountable, no one will remember it.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.